Do you want to trade the proper way to make consistent profit in the market and push yourself to grow your account exponentially? I see a lot of traders making a simple mistake, which is really hindering their success to making money and following a proper process. I'm going to go in depth about this, along with relating it basically to the chart, and then I'll connect it to a bunch of psychology points that I broke down for you all that we really need to implement if we want to change our trading for the better. It's going to be a very good video. Before we get into it, I recommend those who do not already follow me on Instagram. I'll post a link in the description below to follow it at Ameritrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link is in the description below, and you're missing out if you're not following it. But now let's get right into this video. Before we get into the charts and some actual trades, a quote that really stuck with me is this, and I see a lot of people not following this. So you need to follow, and you need to be making your market decisions strictly on what the market is doing and what it's showing you. This is the only way to be successful. If you're making your decisions on outside factors, like how badly you need the money, or what you need the money for, or what you think is going to happen, then your judgment is going to be clouded, and it's going to be much more difficult to see and find good opportunities to profit in the market. So if you're trading without reacting to what the market's presenting to you, then you're basically trading on what you think is going to happen, and the market doesn't care about your feelings, it doesn't care about your opinions, and these are emotional decisions which are going to hinder your success, and it's going to be very difficult to find consistent profits that are exponentially going to grow our account if we are trading this way and having clouded judgments from our emotions. Emotions like fear and greed, the biggest ones, they cloud our judgments. Anything that clouds our judgment is going to lead to poor emotional choices, and poor emotional choices bring losses. These are losses that I consider that they can be avoided if we had the proper mindset or if we had the proper psychology of the market. But fear and greed, even doubt, these are very big emotions that are natural in humans, but they will hinder our success because they cloud our judgment, and it leads to poor emotional decisions in the market, and we will never have success if we trade with such emotional decisions. Now this basically on the chart, an example of fear is today on the S&P 500. Now I'm going to pull up the pre-market plan. I post these every single day in the Discord, setups I'm watching, levels I'm looking out for. And I think a plan, whether you use my plan or whether you construct your own plan based off of mine or just solely off of you, I think it's extremely important to have this type of structure in your trading. And a lot of traders and even beginner traders, I see them trading without a valid plan, and they hop in the market on a whim, basically what they think is going to happen. And again, that's an emotion. So coming up with a plan, in my opinion, structures your trading. And if you follow that plan and you know your plan works out, let's just say 7 or 8 out of 10 times, then you know if you consistently follow that plan, you're going to have consistent success. And by you having consistent success, your account is going to grow, and you're going to start seeing profits, and then you're going to start seeing results. So today, the pre-market plan on the S&P, we had a few different scenarios I was watching. Now, looking at the chart, yesterday, basically on the S&P, we didn't hit any zone. We had demand below and supply above. We're in the middle of the range, basically balancing out. So yesterday's plan really remained unchanged. We hit the supply overnight and we sold off. So this brings me into my pre-market plan today, where I said rallies below 4408 supply, which is this pink box up here, may get sold into, and dips below and above 4355 to 44 may get bought. Said for a downside plan, which is scenario number 2, we must take out demand below. And scenario number 3 for upside continuation, which is a break out of balance. This is where market context and coming up with a plan comes into play, not trading based on a whim. I said if we could strongly break above 4408, which is the supply right here, still a little caution to the upside. I want to see demand created above this level or strong aggressive buying on the tape above 4420, which is now this yellow line. Basically to play, if you play ES, the future, or if you play SPY calls, you could trade the SPY options off of this ES chart. If we could get above with strong buying 4420 to confirm a high probability of continuation, targets for longs will be at 4461 supply, which is this imbalance up here. So as the market opened up, I want to put myself in a perspective of a trader that is going to struggle in the market. So let's just say that was your plan, not even looking at mine. And we see the market coming up, very strong buying. We even identified, if I pull up the intraday commentary tab over here, at 942, we identified some very aggressive buying at the 43.90 level. And I say it's an important level for me intraday. The longer we could hold above it, the stronger the move into 4408. A minute after that, the market absolutely exploded into 4408. And, at this point, I don't really think that it was a good area to get long. I really wanted to see what the market did above 4420. But from a new trader perspective, let's just say we didn't have a plan. Let's just say we struggle with entries and we see the market coming up. And I don't do this, but let's just say we took the market long when we broke above supply. In my opinion, I don't think if you automatically long a market above a supply imbalance or short it below demand. In my opinion, most of the time you may be chasing. But let's just say we got in SPY long at 44.27 when we broke above supply, about 7 points above our 4420 entry. At this point, this was at 10:10 Eastern. I pulled up the SPY 444 contracts. And at 10:10, these contracts were at about $1.46. So if we got long at $1.46, let's just say we traded 10 contracts. It costed us $1,400. 2 minutes later, our $1,400 investment is now worth $1,700. We made a $300 profit in about 3 minutes. But we didn't follow our plan, and we have this emotion of fear. We're not trading the chart. We're just fearful of being wrong. We're fearful of failure. We're fearful that we're going to lose. And because of this, it affects our decisions, and our emotions become clouded. As the market's coming up, we don't follow our plan. Immediately we start seeing a dip down, and our profit that we saw, let's just say at $300, now we're down $150. And what do? We sell this trade prematurely. Our entry at $1.46. Now they're at about $1.30. We're down about $160, about 10% on our account in a 5-minute period because we didn't follow the plan and we let our emotion of fear. We don't want to lose. It's human nature for us to automatically want to win on anything we do, any trade, any competition. We don't want to be wrong. So our body subconsciously and our mind subconsciously tries to protect us. I see a lot of traders, they get in too early, they get in too late, and they let fear creep in. As soon as fear creeps in, you are screwed. The market starts coming down, they stop out, and then a few minutes later, they see that their $1,400 investment could have just made them $800 if they held for 30 minutes longer on a stress-free trade. So that's where fear comes into play. Now we have greed. Now, greed is a very bad one because everybody trades the market to really make money. We want to make profits and, trade to make a crazy unlimited amount of money that the market does offer. And this is where greed comes into the picture. It's natural for us to want to make as much money as we can in a short amount of time. So now here we have NASDAQ, and I want to go over the plan from yesterday. And basically, again, 3 different scenarios. The first one was we're in balance, and we had supply above at 139.83. And we also had demand that we were bouncing at 137.63. So scenario number 1 was if we can get above 14,000, which is this level right up here where my cursor's at, which actually acted as resistance perfectly, I said I'll be open to playing calls as there's minimal supply above 14,000. Now, if scenario number 1 is not true, then we should see responsive selling here at this supply zone. What this means is that if we cannot find buyers at supply, if there's not enough buyers to basically be aggressive enough, remove tons of liquidity from the market and outweigh those passive sellers, then the sellers might show responsiveness, they might hit the market, and they might actually remove liquidity and bring the market to the downside. So as soon as we hit supply, we rejected $1,400 or 14K. Let's just act like we played the market short. We played QQQ puts. I'm not going to pull up the contracts here. But let's just say we played QQQ puts right here. A bunch of members took this trade. Sick entry. They entered when this market started coming down at 1050. Stop loss above the highs. In this case, if you're trading the future, you're risking about 30 or so points. And a lot of people had targets at low a day. Some had targets at VWAP. and some even had targets at demand. So if we're put ourselves in a perspective of a trader who's struggling, or a trader that's failing to be consistent, right? They see the market coming down, they see it dropping, They had an original target of, let's just say the key level right here, which actually coincided with the low of day. And we come to the key level and our contracts are up 300%. Our $2,000 investment is now worth $6,000, let's just say, right? And we don't sell. We're saying, oh, this thing looks bearish. This thing is going to keep moving down. I'm good on this. I'm only up 4,000 now, but I know if we hit demand, I'm going to make 10,000 or something along that line, right? They hold their position. It keeps dipping. They start to feel euphoric. They start feeling adrenaline rushing through their body. They're thinking, oh, I'm going to make so much money right here. It's going to work out perfectly. My analysis is correct. And they didn't sell according to their original target, their original plan. Then the market comes back up. It starts ripping. It hits supply again, and they stop out right where they entered, and they took $1,000 loss. Where at one point they were up at their target 6,000. That's greed. You didn't sell at your target. You wanted to make more money, and you kept thinking that the market is going to move in your favor forever. I could tell you that even the best traders, they're never going to sell at the high and buy at the low. As long as you follow your plan, that is the only thing that could matter. Now, the most important part of this video is it boils down to you not having a plan and not trading what the market is telling you. You are trading basically what you are telling yourself, and this has no effect on how the market's going to move. The market does not care about your feelings. It doesn't care about your opinions. So you must have a plan, and you must react and trade to what the market's telling you. If you are telling yourself something, the market's not going to know what you're telling yourself. The market doesn't care what you're telling yourself. The market's going to do its own thing. So you must conform and react to what the market is trying to tell you. Now, the only way to combat this and the only way you're going to become consistently profitable is by creating a trading plan and trading when and why the market tells you. I don't know why, but I see it with a lot of new traders. They enter the market without a plan, and it's kind of mind-boggling to me why or how they think they're going to be successful without a solid plan, and how they trade on a whim and when they think it's the right time to enter, not when the market's telling them to enter. A perfect example of this is I had somebody message me on Instagram today, right? Or yesterday. And they saw, I posted the NASDAQ pre-market plan just to review it. And they saw this little rally up here. It hit supply perfectly. A bunch of members took this to the downside. Even the double top at supply, some more members took that as well. But I had somebody message me, this is a good lesson. They're like, yeah, look at this rally right here. How come you didn't play this to the long side? How come you didn't play calls and you only played puts at supply? I had somebody ask me that. And how I answered that was, just because the market's moving up doesn't mean you have to trade it. You know, this is where a lot of traders fail. They see the market moving up, they don't have a plan, and okay, it's coming up. Let me get in calls right here, right? Let me get in calls for no other reason than the market's moving up. And yeah, this trade could have worked out, but I can guarantee you 8 out of 10 times, 9 out of 10 times, that's not going to produce longevity, and this is not going to be sustainable at all in your trading. So just because the market's coming up or just because the market's coming down does not mean you have to put a trade on. You have to trade when your trade or your process or your edge or your plan triggers, and that is the only way, reason, and why you should be putting a trade on. Other than that, you're not going to be sustainable in the market, and you're never going to find consistent success if you are trading just based on what you think is going to happen or just because the market's moving. A member posted this in the Discord today, and he said it very well. It was too good to not share. So he started paying more attention to time frames, key levels, supply demand zones, specifically planning everything. His entries, his stop loss, his targets. After he lost so many times, he comes to a point and asks himself what he's doing wrong. He still makes mistakes. And now he doesn't panic. He doesn't sell just because, and he doesn't enter just because it moves up or down either. So now he has a plan, his setups. If they don't trigger, he doesn't trade. The market's going to be here tomorrow. Start by having your plan, respect your targets, your entries, your stop loss, journal your trades, and that's where discipline comes into the picture. I can't tell you how important this is. And once you could accept that to trade the market, to trade your process versus trading the market to make money, that's when a whole lot of things change. I don't wake up and say, okay, I'm waking up and I want to make money today. Instead, I wake up and I have the mentality of, okay, I'm waking up, I'm going to trade the market to trade my setups and follow my plan because I know my plan will bring me results and my results will bring me profits. So as the market was coming up today, this member actually took this trade above 4425. He played it to the long side and he got out at 4440. He followed his plan. Whereas some people, that was his plan. That was also a little bit bounced off of mine. But some people didn't have a plan. They saw the market coming up. They entered randomly and they got destroyed because they didn't enter the market with a plan. Before you enter any position, you have to know where your analysis is going to be wrong, where it's going to be right, and you have to know why you're entering and where you're entering. Those are very important, crucial points because if you follow this plan, right, here's another good example. Let's just say we got long according to the pre-market plan. We consolidated for basically about 4 hours, 5 hours after that move up in a very tight range. A lot of people, if they didn't have a plan, right, they would get scared on this move down right here. We broke below the consolidation where it looks like we're moving down. We put in a lower high, but yet we're still consolidating. We had a clean short covering rally basically for the first 5.5 hours of the market open today. And then we got a clean end of day rally right into our 4461 final target end of day. These contracts went up, 200, 300% by the end of the day. But the main point is when your process and your edge develops and you see your entry signal or a good enough reason to enter and exit the market, that is the only reason you should get into or out of a position. Once you realize this and switch this in your trading, a lot changes. I review a bunch of members' trades in my Discord. I see some traders take excellent, they're killing it. And I see some traders that are new that don't accept this and don't realize this. And it could be simply fixed, where I've fixed a lot of traders having this, they were in this position where they were entering or exiting randomly. And once I told them this and once we gave them structure in their trading, a lot changed and they went from struggling to profitable. So I always think about it like this as well. The market's always moving. It's going to be here tomorrow. It's going to be here next week. It'll be here next year. The problem with that is you might not be trading next week or next year if you don't focus on the process. If you don't focus on coming up with the plan and only trading that plan when your edge is present, then your account might be destroyed and you might not be here to trade next week or next year because you don't have the enough funds. So you always got to be conservative. You always got to be defensive and trade only when your setups trigger. I know it's repetitive, but when you're trading, I want you all to hear my voice and recognize this when you think of entering a position when you shouldn't be. And why many fail at trading is because it offers an unlimited amount of freedom to make an unlimited amount of money. It's something that no other job offers. And a lot of traders take advantage of this and they fail because they don't experience this freedom in everyday life and they don't recognize what they have to do and they keep doing on what they shouldn't be doing. Quality over quantity, opportunity over time, process over results, and following the process and focusing on the process will bring the results in due time. I'm going to leave you all off on that note. I hope this video helped. I would appreciate a thumbs up, subscribe to my channel if you're new, and definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. There will be some changes soon, so get locked in before the price increases. I'm ending it. Peace out.